Hi everybody, welcome to another Horizon View. We are taking a look at our top fives for the ASX exchange traded funds. Our spotlight today is QRE. That is the BetaShares Australia Resources Sector Fund. Hang around to the end to look at that one. Well worth the wait, I think, anyway. So we are here to crack your financial sky. We're here to supply information and demystify investing, especially via ETFs for beginners as well. So stick around, give us a thumbs up, hit the subscribe and the bell, greatly appreciated. So the top 5 percentage rises today, we saw QAG, QRE, which is a spotlight, OZR, IHWL, MVR, dominated heavily by mining and agricultural type ETFs today. We saw QAG up by 1.81%, which was 10 cents on pretty low volume though, because that's quite a small ETF of 666 shares traded. So QAG is the BetaShares Australia ETF, and that's currency hedged, synthetic. As I mentioned, it's very small, only $3 million market cap for that one. Moving on now to the top 5 percentage falls. Today we saw UBU, HAC, NDQ, IZZ, and IXL, so they were all down today. No massive downs there. So UBU, which is the UBS IQ MSCI USA Ethic ETF, and that one aims to replicate the performance of the MSCI USA X Tobacco X Controversial Weapons Index. That we saw a fall here of 1.72%, which equated to a loss of 53 cents on a massive volume of one share traded. Whoop-de-doo. So yeah, look at the rest of those names. It's mainly tech orientated stuff. HAC and NDQs, all IT and big tech stuff on the US market. Top $5 risers, we saw IHVV, IHWL, MVR, BSO, and CETF. So for those of you who have forgotten, IHVV is the iShares S&P 500 AUD hedged ETF. So that one is composed of the index of a large cap US equities. So obviously it tracks the S&P 500, and that's hedged to the Australian dollar. That one's not a massive ETF, but it's not one of the small ones either. So you've got $166 million market cap roughly for that one. Pays a pretty good dividend of 2.81% roughly when I last checked. You get a really good rating here from Morningstar for this one as well. So that gets a gold rating from Morningstar. So we saw a rise of 94 cents, dyslexic anyway, which equates to 0.27% on a pretty low volume. Like I said, it's a smaller ETF. So volume, we saw 637 shares traded. Top $5 falls, we saw SPY, IVV, VTS, IJH, IZZ. For those who have forgotten, SPY is the State Street Spider S&P 500 ETF trust, so that tracks the S&P 500 index, and that one is a small ETF as well, roughly 31 million market cap, and you will get a dividend yield from that one of 1.76%. We saw a loss of $2.77, which equates to 0.67% of the total share price on a pretty low volume of a massive 41 shares traded. What a very, very low volume. Top 5 number of trades. We saw BAS, STW, VAP, BGS, and IVV. So for those who may have forgotten, this is quite a popular one. VAS, it's the Vanguard Australia Shares Index ETF, and that tracks the S&P ASX 300. This is probably the most popular ASX 300 ETF on the market. You'll have a market cap of roughly $3.5 billion, so it's quite a big one. You get a nice dividend yield here of 4.54%, which I think is pretty good. And Morningstar have a rating of bronze on this one. So, yeah, look, it's probably being judged by Morningstar as a middle-of-the-road ETF. Number of trades, we saw 211, so marginally above STW. Looks like it was pretty much on the downside because we saw a loss of 2 cents, which equated to 0.02%. Nothing much really happening here for VAS anyway. Top 5 for volume. Let's see who's the big one for volume today. AAA, no major surprise there. So IOZ, follow her up. Then come USD, and then WDIV and MVW. So for those who have forgotten, AAA is the BetaShares Australia High Interest Cash ETF. So that has high interest deposit accounts in Australian banks such as ANZ, CBA, NAB. That is a reasonably large ETF as well. That one has a market cap of $1.4 billion or thereabouts. You'll get a monthly dividend yield here of 2.03%. Morningstar has a rating here of neutral. We saw a massive volume today. Looks like, a bit over double IOZ of 368,700 shares traded. Looks like it was on the upside though, because we saw a increase here of 0.5 cent by the look of it, which equates to 0.01% rise. So top 5 for value today, we saw AAA, which is no massive surprise, followed up by VAS, VAP, IVV, and VAF. So we went over most of the info about AAA just before. No surprise that we had a value here which is quite high. So we saw 18.5 million shares traded today, which is about 3.5 times that of the runner up there in VAS with $5 million worth of shares traded. No big surprises there, but it didn't look like a massive day on the ETF market anyway, so not much movement really. Okay, let's get stuck into our spotlight here, which is QRE. That is the BetaShares Australia Resources Sector ETF. Interesting one to have a look at. So our investment objective for this ETF is to track the performance of the index that provides exposure to the largest companies involved in the resources sector, which are listed on the ASX. The Y factor provides simple and transparent exposure to Australian resources sector. So with one trade, investors can get exposure to the entire universe of stocks in the index. Holds the largest resources stocks on the ASX, including BHP, Rio, and Woodside. Resources sector is heavily leveraged to the growth of emerging markets such as China and India. So you benefit from dividends and franking credits from the underlying stocks. So it pays a little bit of a dividend, which we'll have a look at in the next slide. So we have a net asset value here of 649, which trades just below that net asset value of 647. We have a market cap of 33,100,000 when I checked today. A very reasonable management cost here of 0.34%. There is a distribution semi-annually, so in June and July you'll get your dividend payment. Dividend yield currently is 3.72%. So the ETF looks to be cost effective and aims to track the performance of the index, so no active management fees, so that's why the management cost is very low. As mentioned before, and with all these ETFs, it provides a transparent portfolio holdings. You can value the fund's assets and net asset value unit available on the website, BS Shares website. It's the same with all these ETFs. It's all very transparent. You can see the value of the underlying assets quite easily. Then don't have to calculate all that stuff yourself. So this ETF could provide, could be appropriate for investors seeking exposure to diversified portfolio of large cap Australian-focused mining companies, without having to sort of spend much time on looking at individual companies, but just keep an eye on the performance of the ETF itself. As always, we like to check out other options, other alternatives. I'd have a look at OZR and MVR. So MVR I've already had a look at, so if you're keen to have a look at the overview on that, I think it was a few days ago, so go back and actually have a quick look at that one as well. So well worth the look. Would I have this in my portfolio? Probably I'd say it's a possibility, but not a high possibility. I mean, I'm typically looking for something that's going to pay a bit higher dividend if I'm going to go into something like this anyway. So, and plus, I prefer to actually pick individual stocks when it comes to these type of things, because I think I can be a little bit more accurate anyway. Yeah, make sure you do your research. So let's have a quick look over at the top 10 holdings. So all the usual suspects here, no major surprises. I suppose the only major surprise here might be the last two, I suppose. They're kind of loosely resources stocks. Bluescape, I suppose. They don't do their own mining, I don't think, anymore. Caltex is obviously refiner, distributor of fuel. So performance since inception on the 10th of December 2010 hasn't been the best. So really you haven't really made much on your money. You've seen a lot of down years as opposed to up years. So probably if you invested in this over this ETF over the last 3 years, you would have done actually quite well. So you would have done 20% or thereabouts. But yeah, like I say, it's not really one high on my list. So as always, we're not promoting any particular ETF or product, purely information here. So you need to take your own financial situation into account and get additional information and complete further research as and where required before we make any purchases. As mentioned before, we're here to give you financial just information, I suppose, trying to demystify the whole world, make it not as scary as it appears at times. So we're here to crack your financial sky, make you guys a bit more confident if we can. So give us a thumbs up, subscribe, and make sure to hit the bell because you want to know when the new videos come through. Sometimes I try to get them out at the end of every day, but sometimes it just doesn't happen depending on what else I'm doing at the time. Thanks, guys. Leave a comment. Yes, give us a like. Greatly appreciated. Catch you tomorrow. Ciao.